the details of the taxes, let us look at what an hospitality industry entails. So when you talk of an hospitality industry, these are businesses that mostly focus on service provision or providing services, and it includes hotels, restaurants, we have bar, we also have travel agencies or companies, and those companies that host events. Those companies that give venues for events. So the hospitality industry is quite a busy industry, and it deals with a lot of transactions. So with this, it is very important to understand how to handle taxes. And that is why we are here today. We are here to get to understand taxation in this industry and learn how you can stay compliant. So in this session, we'll go through a number of, we'll discuss a few items. And one of these is the type of taxes that the hospitality business is required to pay, how you can stay compliant in this industry, the tax planning strategies that will help reduce your taxes. We're also going to learn what happens during a tax audit. And finally, we look at a case study. Also, towards the end, or at the end of this session, we're going to have a demo of my accurate books. So stay tuned. We have a lot for you today. Let's begin with the first part of our session, and this is the different types of taxes that businesses in the hospitality industry are required to pay. There are taxes that are general and they're applicable to all businesses, and that is corporation tax, we have payee, VAT, withholding tax, rental income is specific, capital gains tax, NSSF and SHIF. We also have housing levy, and there are taxes that are specific to an industry based on its operations. And an example of that is catering levy, which we are going to discuss. Under corporation tax is a tax that is charged on profits that is made by a business. And this means income generated by a business, and then you deduct all the allowable expenses. So the profits that you get is what we charge corporation tax, and it's charged at the rate of 30%. That is for companies that have been incorporated locally in the country. The due dates for filing are by the end of the 6th month of the following year. By the end of the 6th month, following the end of the accounting period. The other tax obligation that you are required to pay under corporation tax is a tax that we call installment tax. Note that all businesses are required to pay installment taxes. All businesses and individuals, you're required to pay installment taxes unless you fall under the category that is considered to be exempt. So what is this installment tax? We're going to discuss a bit about installment tax. So an installment tax is basically an estimate of tax that you're supposed to pay, or the tax payable. There are two categories of businesses and that are exempted from this. And number one, a business that pays the taxes, which is considered to be final. The tax that is considered to be final is TOT, and also we have MRI. So if in your business you're paying TOT and MRI, you're not required to pay installment tax. Also for an individual, if all the income that is filed under your PIN is charged under payee, that means all your income is employment income. You're not required to pay installment tax. However, if you're an individual and aside from your employment income, you also have other sources of income. And from this, your tax liability comes to over 40,000 Kenya shillings in a year. You're required to pay installment tax. How do we determine installment tax? We have two methods. We have the previous year basis and the current year basis. The current year basis is mostly sorry for that. So we are still discussing installment tax. We are still under corporation tax. We are still under corporation tax. So I was saying there are two methods of determining installment tax, the previous year's method and the current year method. So the current year method of determining installment tax is mostly for startup companies because they don't have returns to make reference with. And for the previous year's method is whereby you take your tax liability for the previous year, you multiply this by 110, and whatever you get as your tax liability, you distribute this into 4 equal installments and spread it across the year. So these taxes, you're going to pay them on the 20th day of the 4th, the 6th, the 9th, and the 12th month of the company's financial year. That is all about installment tax. There are penalties for failure to comply to this. And for late filing, you're going to attract a penalty of 5% on the tax due or 20,000 Kenya shillings, whichever is higher. Also, late filing payments incurs a 20% penalty and an interest rate of 1% per month on the unpaid tax. The other obligation we are going to discuss is pay. So if you're an employer in the hospitality industry and you pay salary amounting to 24,000 and above, you're required to register for a pay obligation, file, and pay. And it's mandatory. So it is taxed on a graduated scale. at a minimum of 24,000. Failure to adhere to this, you will be charged with a penalty of 10,000 per month. The due dates for filing pay is on or before the 9th of the following month, and also be keen to take advantage of the personal relief of 2,400 per month and 28,800 shillings in a year. The other obligation is VAT. So VAT is levied on the value of goods, value added to goods and services at each stage of production or industry. So in the hospitality industry, all the sales that you make, they are chargeable VAT at a standard rate of 16%. There are goods that are exempt or zero rated, but under hospitality industry, all your sales are chargeable VAT. So the due dates of filing are on the 20th of the following month, and penalties for late submission attract a penalty of 10,000 Kenya shillings or 5% of the tax due, whichever is higher. Also, if you make late payments, you're going to incur a 1% interest charge per month of the unpaid tax. The other obligation is VAT withholding, and this is a mandate on withholding VAT agents. Not everyone withholds VAT. You have to be appointed by the commissioner to be a VAT withholding agent for you to withhold VAT. You withhold VAT at 2%. So in the hospitality industry, if you transact or if you do business with a person who is appointed as a VAT agent, expect that 2% of your 2% of your payments will be deducted and remitted to KRA upfront prior to payments. And if you are in the hospitality industry and you are a withholding agent, you will be required to pay 2% of the payments of your purchases to KRA. The other tax is the capital gains tax. Capital gains tax is a tax that is levied on transfer of property that is situated in Kenya, acquired on or before January of 2015. So if it's charged when you sell a property. For example, if you are a hotel owner and you decide to sell that hotel building that you bought a few years back, say at 20 million. The buying price is 20 million, but now you're selling it at 35 million. So the profit of 15 million is what is going to be charged capital gains tax at the rate of 15%. And it's a final tax, which means when you pay that, you're not going to be expected to pay any additional taxes on it. Other taxes are withholding tax. And this is tax that is deducted at source. Remember, we talked about withholding VAT, and this is withholding income tax. So withholding VAT, you're supposed to be a withholding tax agent for you to withhold. But for withholding tax, if you seek professional services, you as a hotel industry or you as a person who owns a restaurant, you decide to seek professional services. Maybe you come to us for our services, or you seek services from a lawyer or maybe an IT specialist. You are required to deduct a certain percentage of this and remit to KRA before making payments. Withholding taxes rates vary depending on the nature of payments. It varies from consultants to contractors and even suppliers. The other tax obligation is rental income. This is MRI for those who have residential property, and is charged on income between 228,000 and 15 million per annum. So it's going to attract a tax of 7.5% on the rent income that is made in that period. And it's a final tax, meaning there are no additional charges to it. So if you're an individual and you have rental properties that are residential, we have residential and we have commercial. This is particularly for residential. You are going to be required to pay 7.5% of your rental income every month, and it's a final tax. So for rental income, any income that is above 15 million per annum is going to be taxed at either an individual graduated scale or a corporate tax or a corporate rate of 30%. So rental income is only chargeable, MRI is only chargeable on income that falls between 228,000 and 15 million. Anything above that is charged either at an individual graduated scale, that is for an individual, and for a company at a corporate rate of 30%. The other statutory we are going to discuss is the NSSF. So we've had new NSSF rates effective February this year, whereby the lower earning threshold for the purposes of calculating NSSF has risen from 7,000 to 8,000 Kenya shillings, and the upper limit now is 72,000. It has doubled from the previous 36,000. Consequently, the monthly contributions for both the employer and employee has been capped at 960 for the lower earning limit, while the maximum contribution will be 8,640 for the upper limit. So this is split between the employer and employee. This is how the NSSF rates look in comparison to what was there last year. So the lower limit was 7,000, now it has come to 8,000. Contribution by employer was initially 420 and now it's 480. How we arrive at the 420, it's 6% of the lower limit. So 6% of the lower limit gives you the contribution for Tier 1, and this should be matched up by the employer's contribution, totaling to 840 for the previous year, but now we are the Tier 1 contributions are 960. For the upper limit, the previous year we had, last year we had 36,000. Now we have 72,000. So contribution on the upper limit, you take the upper limit, you deduct the upper limit contribution, you deduct the lower limit and charge 6% to it. So when you do that, you get your contribution as an employee, 72,000. When you deduct 8,000, it gives you 64,000. Now from this, you charge 6% and arrive at your contribution as an employee and the contribution of the employer, totaling to 7,680. So contribution for both Tier 1 and Tier 2 comes to 8,640. Now, note that for Tier 1, it's mandatory for you to contribute this to NSSF. This should be paid to NSSF, but for Tier 2, you are allowed to make this contribution to a registered pension scheme of your choice, provided the pension scheme is registered and it is recognized by the commissioner. The other statutory that is mandatory is the SHIF. So SHIF is a new health insurance program in Kenya that is designed to provide universal health care coverage to all Kenyans. So a contribution of 2.75% should be made every year. So this is 2.75% of your income at a maximum of 27,500. For individuals that are not salaried, you're also required to pay a minimum of 300 Kenya shillings. Deadline for filing this is on the 9th of every month. And for the non-salaried persons, you're supposed to make your contribution, or you're supposed to pay 14 days before the annual contribution lapses. Penalties for non-compliance, we have 2% of the, you'll pay 2% of the unpaid contribution. Also, if you fail to contribute, you're likely to be charged a fine of up to even 2 million Kenya shillings, or even imprisonment. If you give false statements, you're also going to be penalized. So ensure you comply with this. The other mandatory deduction is the housing levy, which is charged at the rate of 1.5% on the gross monthly salary, and is matched by 1.5% contribution by the employer. Deadline of filing this is on the 9th of every month, and it's filed together with payee. So you fail to pay this, you get a penalty of 3% of the unpaid amount. You get penalized 3% of the unpaid amount. The other very important levy that businesses and our hospitality industry are required to pay is the catering levy. So the catering levy in Kenya is a tax that is imposed on restaurants or bars that make a minimum gross sale of 3 million per annum, or an average of 250,000 Kenya shillings for the first 3 months of the trading months. So if you calculate your income for 3 months, this is maybe a startup company, and an average of this comes to 250 and above, you're supposed to pay catering levy. So the levy is calculated at a rate of 2% and is payable to the tourism fund by the 10th day of the following subsequent month. So penalties for failing to pay on time is going to attract a penalty. You fail to pay on time, you're going to attract a penalty of 5,000 Kenyan shillings, an additional penalty of 3% of the amount of the levy due for each month or part thereof during which the amount due remains unpaid. So for every month that you fail to pay this levy, you're going to attract an additional 3% fine. So generally, levies are aimed at raising funds for a specific purpose, or maybe for a specific purpose in that sector. And in this case, the catering levy is intended to finance the development of the tourism products and services, marketing of Kenya, the Kenyan industry, hospitality industry abroad, and even conducting research. So that is what this levy funds. Aside from taxes, there are other very important licenses and levies that you're supposed to pay to the county. One of these is the business permit. You're supposed to have a business permit. You should be given a liquor license. You also pay for garbage collection. If you decide to advertise your restaurant outside, maybe you want to put a signage, there's a fee that you're supposed to pay to the county. There are food handling levies and licenses that you're supposed to apply for. The health inspection certificates, and even the fire safety certificates. So you need to also comply with this in addition to the taxes. So what are some of the tax compliance challenges that businesses under the hospitality industry face? The first one is late filing and payment of VAT and income tax. So you find that in the hospitality industry incurs very high operational costs, and this affects maybe the cash flow of the business. And for that reason, you may find that you, as a business, you decide to prioritize paying your expenses, offsetting, paying your suppliers, your expenses, and you forego payment of taxes. So ensure that you file and make payments within the stipulated timelines, just to avoid brushing shoulders with the authorities. The other compliance challenges is under VAT on items and input VAT claims. So ensure that you're onboarded on items and you issue an items compliant invoice. There are some restaurants that still use the manual receipts in the attempt to avoid paying taxes. This is very risky. So ensure you're onboarded on items and you issue items compliant invoices and receipts. The other one is on input VAT claims. Input VAT is the VAT on the purchases that you claim. So ensure that when you're filing your VAT, the purchases that you use are those that relate to your business. Do not include your own expenses. Maybe you bought a furniture and you decide to put this as a purchase to the business, or any other expenses. You did shopping for your household and you decide to include this in your VAT. This is not right. Also, ensure that the purchases that you claim are those that have VAT on them. Do not use zero rate exempted purchases to claim VAT. The other compliance challenge is on pay and employee benefits. So as a business, it could be that you give some benefits, both cash and non-cash benefits to your employees in terms of accommodation. Maybe you give them food, maybe you give them uniforms, or even tips. So ensure you account for this correctly when you're filing pay, just to avoid having pay compliance issues. The other compliance challenge is under the county government levies and business permits that we've just discussed. So some businesses struggle to comply with this. You find that each and every month you're playing hide and seek with watu wa Kanjo, because you don't want to renew your permit, or either you don't want to pay for a specific license. So ensure even on this one, you are compliant. The other challenge is on record keeping and inconsistencies. When you talk of record keeping, it begins from how you organize your records and how you file and your filing system. So ensure your records are well kept, from invoices, those credit notes, those delivery notes, those petty cash vouchers. Ensure they are well kept and well labeled. Yeah. When it comes to inconsistencies, ensure that, KRA normally cross-checks what you have filed or the revenue that you've declared against your other records, such as your bank credits, your M-Pesa statements, or the eTIMS. So ensure that information contained in your bank, in the eTIMS, in your M-Pesa statements, and whatever you have filed as your revenue, they match, to avoid plugging KRA for an audit. So then how do you stay compliant? The first thing, there's a saying that goes that ignorance of the law is no defense. One of the important guidelines is to ensure that you understand your business tax obligation, just as we've discussed above. Do not be that business owner who leaves everything for the accountant. You are clueless. You don't know what taxes you're supposed to pay. You don't know how they are supposed to be filed. You don't know the deadlines. And yes, the accountants do a good job. They help. But if you do not know the taxes that you're supposed to pay, you as a business, in case of an error or a mistake, remember that cost is going to fall on you. So you have a mandate, even you as a business owner, to understand the different tax obligations that your business is required to pay. The other one is on maintaining accurate records. We've just discussed. Ensure that all your invoices, all your records are well kept for up to a period of 5 years. Also ensure that you timely and accurately file your returns to avoid penalties. Explore legitimate tax planning strategies. We are going to look at that shortly, so stay tuned. The other guideline is engage with a tax professional or a consultant to ensure that your business is fully compliant. Now, you as a business person, you may not know, you may not even have the time of going through the different tax acts, going through the VAT Act, the Income Tax Act, the Tax Procedures Act, and getting to understand what the law requires of you. So, and this is where the tax professional comes in. So it is very important to engage a tax professional who is going to assist you, who is going to guide you, and also interpret these complex taxation matters. Interpret these complex taxation matters and they're going to guide you. They're going to help you identify gaps. Having engaged with KRA, they understand and they know what KRA looks out for. They understand their language. So it's very important for you to involve a tax professional, and you do that now. Do not wait until when KRA is knocking at your door. That is when you go around looking for a tax expert. This is the time to build a rapport with them. Yeah, get a reliable and an experienced tax expert such as WK Africa, and let them work with you through your journey. This is going to save you a lot, especially when it comes to KRA audit. The other guideline is to ensure that you regularly check on the official communication from KRA and stay updated. Yeah, it's important to stay updated on the changes that are coming up, especially in the on taxes. Recently, there's been a lot of change, and there's still going to be a lot of changes. So it's important for you to stay updated and be in the know in case there are any changes that affect your industry. Also, on that, ensure that KRA normally communicates in case there is anything regarding your PIN. KRA is going to communicate to you through the email that you registered your PIN with. So also you can be checking, ensure that you be checking on a regular basis if there is any communication from KRA. So what is the importance of staying compliant? One of the importance of being compliant is that it becomes easy for you to access finances and loans. So for a business that is compliant, getting funds and capital becomes very easy. No one wants to be associated with a company that is always in the limelight for the wrong reasons, or a company that is always having issues with KRA day in, day out. They are solving issues with KRA. So one of the advantages of being compliant is that if you approach a financing facility for a loan, and they look at your records and identify that you're compliant, it becomes very easy for you to obtain funds for your business. The other importance is that it improves your business operation. So when we talk of being compliant, it also involves maintaining organized financial records and ensuring that there's a proper documentation of your expenses and the sales and the purchases. So this will help you streamline your business operation, and it will make it easy for you to even track performance of your business. The other importance is staying compliant is going to help you avoid KRA, avoid or minimize the risk of being audited by KRA. So ensure you are compliant. It's going to save you from unnecessary disruptions with the taxman. The other importance of being compliant is that you get peace of mind, you as a business owner. So you do not have to worry about any surprise visits by KRA. And even if they come, you are confident that all your records are well kept. And with that, now you can focus on how to expand your business, grow your business. Yeah. So, and you'll even sleep better knowing that everything in your business is going on well. And I believe this is what every business person needs. So ensure that you are compliant. Now let's look at something that can benefit your business. Let us look at the practical guides on how you can save on taxes as a business under income tax and VAT. So under income tax, one way of saving on taxes is interest expense on loan taken for the furtherance of a business. So if you as a hotel owner decide that you want to expand your business, or maybe you want to do renovation and you take a loan to finance this, the interest expense that you're going to be charged on that loan is considered a business expense, and that makes it an allowable expense. So at the end of the year, when you're filing your returns, you can use this expense to reduce your tax liability for that period. On this one, you also have to be very careful not to over-rely on loans, because this is also another red flag with KRA. When you over-rely on loans to finance your business, it brings out an issue that we call thin capitalization, which is also a red flag. So ensure you balance on this and take advantage on it at the same time. So the other tax saving strategy is bad debts. So in the case where you offer services to this particular customer, but they fail to pay you, and by the end of so you offer services as a hotel industry, and this person fails to pay you. So if this debt remains unpaid for a period exceeding 3 years, you are allowed to offset this or write it off during when you're filing your returns. It becomes an allowable deduction if it exceeds 3 years. And KRA will not let you off on this easy. You need to have proof that indeed you have tried to recover this money, but you've not succeeded. Either you sent them demand notices through emails, you engaged a lawyer. If you did all this, ensure this is well documented, because KRA is going to ask for proof. The other strategy that we can take advantage of is on capital allowance, sorry. So this capital allowance, it applies when a business invests or purchases an asset. It could be a machinery, could be software, it could be a building. So when you purchase these assets, you are entitled to a deduction of ranging to between 5% and 150% of the cost of that asset. So this is an allowable expense, is an allowable deduction, and therefore it's going to you're going to use this to reduce your tax liability for that period. So taxpayers should ensure that they properly claim their capital allowances where applicable. On this one, in case KRA comes at you and asks for proof, ensure you have those invoices on the invoices for the assets that you purchased, if it's a motor vehicle, if it's a furniture, if it's a software, computers, ensure you have those receipts as proof to avoid the KRA disallowing this expense. The other tax saving strategy that we are going to discuss is under VAT. And on VAT, we are looking for ways to maximize the input VAT that we claim. One of the ways to do this is ensuring that you buy from a supplier that is registered for VAT. This allows you to claim input VAT on the purchase. If you purchase from a supplier that is not registered, it means you are going to be charged VAT on that purchase, but you're not going to be able to claim it. That will increase your VAT payable. So ensure that you transact or you purchase from a person that is registered for VAT. The other strategy is claiming input VAT on assets. So purchases or assets such as furniture, motor vehicle, of kitchen equipment such as fridge, they come with huge VAT. And note that we are talking about purchases that relate to your business. So if you purchase these assets, you can use that to lower your VAT payable. The other strategy is planning your purchases. How do you plan your purchase? You may decide to group or time your purchase to happen within a specific tax period. Of course, bearing in mind the 6-month rule of claiming input VAT on a purchase. The other strategy is buying on credit. Note that VAT is claimed based on the invoice dates and not payment. So if you make a purchase right now, and before you pay, you use that purchase on your VAT when claiming your VAT, or you file that purchase on your subsequent return. It means that you're going to recover your VAT even before you paying that supplier. And this is going to improve the cash flow of your business. The other strategy is issuing a KRA PIN, and this is in line with eTIMS. So ensure that you are onboarded on eTIMS and always give your PIN to your suppliers. So when you're making your purchase, ensure that your PIN has been captured in that receipt. That way it's going to auto-populate and you're going to use it to lower your tax liability. The other strategy is proper record keeping. So this we have mentioned a number of times, but I cannot emphasize this enough. Ensure that you have all your records properly kept. This is your defense. This is your number one defense when it comes to KRA audit. So ensure your documents are well kept and well organized for retrieval. It could be that you have they're well kept but not organized. So ensure they're well organized. If it's monthly, yearly, ensure they're well kept. So the other thing that we are going to discuss is the KRA audit. Note that the hospitality industry is one of those industries, alongside those in the import business, This is one of those sectors that is considered of high risk when it comes to KRA audits. And this is because they mostly deal with cash transactions. And when we talk of cash, it means that maybe tracing these transactions is difficult. Traceability becomes difficult. And this means there are chances of under declaration or tax evasion. So that is what makes it a very risky business when it comes to KRA audits. So what is a KRA audit? A KRA audit is a thorough analysis and scrutinizing of your returns, just to ensure that you are compliant and that whatever you've been filing or whatever you're filing is correct. There are different ways in which KRA conducts their audits. And one of the ways is using the field agent officers, where they send an officer to your business premise. They'll come and interrogate you. They'll ask for documentation from you. So we want to look at how you should engage with these officers when they visit your business. So the first thing is greet them politely. Greet the officers with respect and show cooperation and a polite attitude. This can help create a very positive atmosphere for discussion and even coming to an agreement. Upon greeting them, verify their identity. We want to make sure that we are actually dealing with KRA agents and not just some random person. So you ask them for their official identification and their authorization. So if they are genuine, they should have these identifications. The other thing is you need to assign a specific contact person who is going to engage with the KRA official. Could be the owner of the business or the accountant, someone who has the knowledge of how the business is run and the financial aspect of that business. Also, you're going to ask them about the purpose and the scope of their visit. Ask them what they're looking out for, engage them and try to understand what is it that they're investigating. So you are also urged to stay calm and be cooperative. KRA audits are not personal. It's procedural. So do not get personal. You may be tempted to get angry, be dismissive, have a dismissive attitude. So do not do this. Ensure that you stay calm, answer all the questions, be truthful. Do not guess or do not make assumptions. If you're not sure of something, tell them you will find out and get back to them. Do not make any guesses. The other thing is ensure you provide documentation that is required. We are assuming you are an organized business. You have all your documentation ready. So if they require any particular invoices or receipts, ensure that you provide this. Maintain privacy. So while cooperating with them, also ensure that you protect the sensitivity or the sensitive business information. Only share documents that are relevant for the purpose of this visit. So ensure you stick to what KRA has requested from you. If they tell you they want invoices for 2020, stick to that and give them those invoices. Do not go ahead and give unnecessary information. This will open up other issues that could otherwise been avoided. Also, ensure that you address your issues promptly. So in case of any issues identified during that visit, ensure you follow up with them and resolve them as soon as possible. Do not ignore. The other thing is have a record of the details of that visit. So include the names. This includes the names and the contacts of the officers, the date and the time in which they visit, and any other documentation that they requested and you provided. Ensure this is well documentation. This is well documented. What are these practices that will make KRA come and audit you? The first thing, KRA may have identified some tax triggers from your returns. One of these triggers is a variance in the annual account salary figure and the payee return. So if the salary figures that you have claimed on your income tax returns do not match with your payee returns, this is going to flag you for an audit. The other trigger is when there's a variation between what you have declared as sales on your income tax and VAT returns. So ensure what is on your VAT is what is appearing on your income tax in terms of sales. This variation could lead to an audit. The other trigger is VAT refund claims, and this is mostly for entities that deal with zero-rated goods. So if you are dealing with zero-rated goods and you apply for a refund for the first time, be prepared for an audit. KRA is going to conduct an audit to determine if you're indeed eligible for these refunds. The other trigger is nil filers and those who filed returns late. So you have applied for an obligation, you have a VAT obligation, but you never file. Or if you file, you keep filing these returns late. So you do this enough times and KRA is going to come after you. The other trigger is being in a consistent VAT credit position. You get to a VAT credit position when your purchases exceed your sales for that particular period. So if you are consistently on a VAT credit position, KRA is going to conduct an audit on you to verify those purchases, to verify your returns, and to ascertain that you're not under declaring your sales. The other trigger is being in continuous losses as a company. It's been 5 years since 2020 to now. You're still making losses. Yeah, KRA would want to understand what kind of business is this that you are doing, that it's been 5 years, you're making losses, but you're still in business. KRA will want to know if your position, your business financial position, and ascertain as to whether you are under declaring your sales. The other trigger is the industry trends versus the specific company profits. KRA normally does a comparison between companies in the same industry, and they come up with a margin. So if you fall too low from the margin, or you're too high above the margin, it's going to flag you for an audit. It's going to flag your business for an audit. The other trigger is third-party data. if there is a mismatch between third-party data. And when you talk of third-party data, these are bank statements or income from your bank, information from your suppliers or your customers, or the M-Pesa statement. So KRA will cross-check. The first thing KRA normally asks for when they conduct an audit on you is the bank statement. So they look at your bank, what has come in through your bank, and compare that with the revenue that has been declared. They will look at the purchases that has been claimed under your PIN. These are your customers. They look at data from your customers and match that with the sales that you have declared. So if they find there is a specific customer who has claimed a purchase from you, but on that period you have not declared the same as a sale, this is going to flag you for an audit. The other trigger is the whistleblower complaints. So your friends, your employees, your enemies, your family members could be a risk to your business. So ensure that you live well with people. Do not step on people's toes, pay people what you owe them, just to avoid paying huge penalties. And this will be caused because you, for example, an employer, maybe you terminated an employee's contract and you failed to pay them. It could be your customer. You failed to deliver goods. It could be your supplier, you did not pay them. So ensure you live well with people just to avoid unnecessary additional costs that come with KRA audit and the stress. So what actions should you take in case of an audit? The first thing you need to understand the frame given by KRA. So when they initiate an audit on you, they give you a timeline to respond, a timeline to share documentation. Ensure you understand this time frame that has been given and adhere to it. Evaluate the information required by KRA. Read and understand the letter. Read and understand what is required of you. You can also involve your tax agent to help you interpret this and help you and explain to you why certain records are required by KRA. Also carry out a pre-audit compliance check, and this will be, you'll be assisted by your tax agent. A pre-audit compliance check, basically the tax agent will look at your returns fully or in details, identify any gaps, and try and seal those gaps before sharing information with KRA. This is a very important stage of a tax audit. The other thing is an opening meeting with the KRA team, get to know each other, get to understand the scope of the audit. In case of any clarification and questions, this is your time for you to ask. Yeah, the KRA officials will explain to you what is required of you, and they'll explain to you the audit process. The other thing is to assign a contact person from your finance team to the contact person. So this person is knowledgeable and is aware of the financial details of the business. So it's important to have one person who will be engaging with them, just to ensure that all the information that is shared with KRA align. When you're at this point, ensure that you resolve as many issues as possible during this audit process, because you have the opportunity to sit with them explain your side of the matter, have KRA respond to you, discuss and come to an agreement. If the issue escalates and goes to the dispute resolution process, it becomes more complex and more expensive. So ensure that you resolve as many issues as possible during this period. Also ensure that you receive an official letter of findings from KRA. So upon conclusion of a KRA audit, KRA is expected to issue you with an official letter of findings. Do not go and resolve issues through the back door and assume that the matter has been resolved. Ensure that the officer who is handling your case has given you an official letter of findings. This will have details of what was agreed upon, the taxes that you're supposed to pay, and the way forward. If you do not have this, remember you can be audited. Find that maybe this audit was for the period between 2021 to 2024. It was concluded, but you don't have a letter of findings. There are instances when KRA erroneously may raise an audit on the same period. So if you don't have an official letter of findings showing that this period was audited and these are the findings, then you cannot defend yourself. You will have to go again through that whole process of audit. So ensure you have an official letter of findings from the authorities upon conclusion of the audit. And also pay any taxes which are not in dispute. This is an act of good faith. You're showing them that you are willing to comply with the regulation. So if there are any taxes that you agree with, ensure that you pay them upfront. So when you conclude a tax audit, you get a tax decision from KRA. And this tax decision could be, it could be that you agree to it or not. So if you do not agree with the tax decision that has been given to you, you are allowed to object. So you have 30 days to object to this decision, and the commissioner has up to 60 days to issue an objection decision. So if you are aggrieved by this objection decision, you can escalate the matter further and apply to the TAT, and go even to High Court if you're still dissatisfied by the judgment given under TAT. And while under TAT, you also have the opportunity to go through the ADR mechanism system. ADR is faster, it's cheaper, and it gives you an opportunity to sit down and agree and come to an agreement. So that marks the end of the tax audit process in a summary. So I want us to look at a case involving, this is a case study involving Villa Grazia Luxury Hotel versus the Commissioner of Domestic Taxes. You can get this appeal number and maybe during your free time, look at this case in details. It is there. So Villa Grazia Luxury Hotel, this is a hotel that is along the Nairobi-Nakuru highway. And the background of this case is that Villa Grazia Hotel was issued with a tax assessment amounting to 7.2 million on VAT and income tax. So KRA based their assessment on a bank deposit. So they were requested to give their bank statement, and also purchases claimed from their PIN. These are their customers. They did a comparison between what their customers has claimed and the sales that have been declared. So what are the key compliance issues that were identified? Number one is under declaration of sales. The Kenya Revenue Authority identified that there was a discrepancy in the Villagracias VAT returns, particularly on January 2023, where the sales were underdeclared. So KRA was able to look at purchases that were claimed under this PIN and the sales that were declared in that period, and determined that there was an underdeclaration. The other one is lack of documentation for exempt and sales. The hotel claimed that a certain sales were exempt and zero rated, but failed to provide documentation for the same. So for the hotel industry, we say there are no zero rated sales. There are no exempt or zero rated sales. But for Villagrazia, they had these sales and they were asked to provide documentation for the same, and they were not able to do that. The other is improper record keeping. So the tribunal noted that the hotel's record were insufficient to ascertain tax liability accurately. So they were requested to support their purchases and their expenses, but they were unable to do so, violating Section 23, Section A and B of the Tax Procedures Act. The other issue that was identified was mixing of personal and business transactions. So the hotel acknowledged that there were difficulties in distinguishing between the owner's personal operations and the hotel's business activities, leading to a compliance challenge. So the director of this hotel said that alongside the hotel business, they also conduct a farming business. And for that, they were not able to provide support. And also the other mistake is that when filing their return, they did not separate the business income and that of farming. Also, money coming in the account could not be separated. The money coming from the business and that coming from farming could not be separated. So what do we learn from this case? It is important. It is very, very important for you to keep a clear record of all the transactions that you do. In case of farming business, for that director, ensure you have expenses, any expenses that have been incurred in that business. Have a record of that. When filing your returns, there's a provision for you to separate different sources of income. So when you're filing your income tax return, there's the business, we have farming, we have rental. Ensure that you separate these businesses. That is one of the mistakes that they did. Also ensure that you have proper records. You see, they were unable to support their expenses. And for this, the expenses were disallowed. So this case is important. This case is important to today's discussion because it shows us how our day-to-day business choices really affect us. From how we organize our records, from how we file our returns, and also I'd like to emphasize on something. Note that 90 to 90% of the tax audits depend on facts. And when you talk of facts, how do you ascertain a fact? It's by documentation. And it has been proven that most taxpayers really fail on this. You have the expenses, but you cannot be able to support them. So ensure that your records are well kept for the purposes of tax audits. So this marks the end of our webinar today. But before that, allow me to take you through some of the services that we offer at Dudley. And one of the services that we offer is the audit services. So here we're going to help your business stay compliant by ensuring that your financial records are in order. So if you are in need of a statutory audit, an internal audit, an accounting system audit, a project management audit, if you need your financial statements to be audited, a forensic audit, ensure reach out to us and we'll assist you on that. The other service that we offer is on tax. So the tax department handles everything on taxes, from filing your returns to the tax health checks, tax refunds process. We help you apply for refunds and follow up and ensure that you've been refunded. We do tax planning for you. We represent you at KRA on different issues. We work with you during our KRA audit process. We offer advisory services and also tax training. So if you want to stay on the right side of the tax man and avoid unnecessary penalties, reach out to us. We are here to assist you with that. So here is our bookkeeping department where we help you keep your records well and organized. So we can do a management report for you. We can file the statutories. We do bank reconciliations, payroll, accounts payables and receivables, the trial balance and reconciliation. We do cash flow forecasting, cost management, break-even analysis, and we also do budgeting and provide you with a report for that. So as a business, we're going to relieve you from the stress of thinking about the numbers. Yeah, you're going to focus on growing your business and your business operation and leave the numbers to us. So if you're in need of these services, or if you'd like more details, or you want to talk to us about these services, please do not hesitate to reach out to us. Our contact details will be provided. And also, something else I forgot to mention, there's a link on the chat box. Ensure you register on that link so that you can get access to these notes and recordings after this. The other thing that I want to talk about is the upcoming audits and bookkeeping masterclass. This is a perfect opportunity for you to get hands-on experience, practical skills on bookkeeping and audit. So we're going to take you through the basics of bookkeeping and audit up to the complex bits of it. We're going to have practical exercises on QuickBooks and how to use QuickBooks and how to use My Accurate Books. This is also an opportunity for you to ask all those questions that you have regarding bookkeeping. Practical questions, the challenges that you face as an accountant. Here's your time to. Here's an opportunity for you to ask, and it will be addressed. Also, note that we are charging 10,000. This is a 2-week training, and we are charging 10,000 for the audit masterclass and 10,000 for bookkeeping masterclass. But if you enroll for both, you get an offer of 15,000 Kenya shilling. This is an Easter offer that is running between today and next week. It ends next week on Tuesday. So ensure you sign up, book your slots as soon as possible and as early as possible to ensure that you don't miss out on this offer. So that being said, I want to thank you so much for your time and your attention. I hope this session has been very helpful to you, and I'd like to wish you well. Have a great day ahead, even as you try to implement what we have discussed here today. So thank you. And please do not leave the meeting. We have a demo for My Accurate Books. So stay tuned. Thank you and bye.
Yeah. So good afternoon. It's afternoon, eh? Check. Unasikia? Okay. Yeah. Good afternoon. My name is Kennedy. Working with My Accurate Books. Thank you, Grace, for that amazing session. Yeah. So My Accurate Books. Okay. One of the things that stood out from Grace is record keeping in business. Yes, which is required for compliance and tracking overall operations of your business. So with My Accurate Books, you are doing all that from tracking how your business is doing to making sales and all that. So I'm going to take a quick demo. Yeah, like less than 5 minutes, and then we'll be done. So yeah, what is My Accurate Books? It's an accounting software that help keep track of your business. So yeah, so okay. So for a start, you just go to we have the website version and the web version. Yeah. So start from here. So yeah, search for My Accurate Books online. Then you'll be taken to this screen. If you don't have an account, you click that and then you sign up with all these details. And you submit. After submitting, you'll be taken to this screen. And then have your email address and password. And you log in. So this is the dashboard of My Accurate Books, which provides you an overview of your whole business from sales, expenses, and purchases, and the profit or loss you have made from that entire period. So you filter by date. This is from, on my case, this is from that 17th March 2025 to April to today. To today. So you can filter by date and then apply filter to see all those figures. So you start from adding an item to sales, purchases, expenses, customer report, user management, and branches. Yeah, so this is the items view. So you can add a new item. This when you want to add a single item at a time, or you can import. You click import, download a template, and then fill that template, and then click here to stop with that. Yeah, this is the template. Fill all this template with your products, with the description, vendor, all those, and then you come back here and upload that document, or else you can just choose to add a one by one item, one item at a time. Click to upload an image and then click add. Yeah, so after adding an item, you can make a sale. You can see a list of all your sales here. You can filter them by date, by status, or by customer. Yeah. Then if you want to make a sale, you can just click make a sale. Add your items that you want to sell. Select customer, and then if you want to pay now or buy now pay later. In this case, let's say go with the pay now, and then add your payment method, date, which is optional in case you want to backtrack, and then you complete. Yeah, so this is the preview. You can download that PDF or you can print, or at this point you can decide to make a new sale. Yeah, so that's a sales part. In case you have any question, post it on the comment section. Yeah, so that's making a sale. You can create a quotation here, the same process, adding an item, customer, payment method, and expiry date. Then you click create a quotation. In case you want to return an item that you already sold, create a credit note. So you can just come here. This is a sale that we just made. You can just create a credit note, select that one item, quantity, with the reason now as to why you want to credit note that item, and then create a credit note. As you can see, we have that credit note here. You can download it, or yeah, you have an option to download that credit note. In case of you made a sale that was supposed to be paid later, you can come here and receive payment. Let's see something like this. You have payments classified with customers. Yeah, so you can collect payment for this invoice. As you can see, we have number of invoices associated with this customer. So you can just click pay now, amount you want to pay. Amount you want to pay, and then complete that. So you can go to invoices until do the same to other invoices. You can receive payment for invoices. As you can see, this one now is paid. For purchases, you can create a purchase order. The same process, adding an item, but on this case, you are going, instead of selecting customer, you are going to select a supplier. Then purchase order terms, then you create a purchase order. Yeah, so you can do the same to creating a purchase, that is purchase order. You can create a purchase, and then you can create a debit note. From this purchase, you can create a debit note. Selecting an item, quantity, and the reason as to why you want to debit note that particular item. Yeah, so you can record your suppliers, keep track of your suppliers. You can add a new supplier with supplier name, email address, and phone number. You can pay for a purchase in case you received a purchase that was supposed to be paid later. You can pay for a purchase. Yeah, so with the purchases, you can go to expenses, record your business expenses from your bills to any expense that you want to record on the associated with your business. You can just come here, record an expense. Yeah, start by selecting category. In case you want to create a new category, you can just create a new category for your expense. Select payment method, whether it was paid or it is to be paid at a later date. You can just select paid or unpaid, then amount, and description for that expense, and then you save that expense or category is required. Yeah, so the same way we recorded or we created a record of a vendor, you can create a customer record. You can track all your customers with your name, contact type, and yeah. So you just create a customer with the first name, last name, but you just need first name and maybe phone number and email address. Yeah, you can just do that to create a customer. The next part is report. You have inventory report. You can track all the goods sold by date and print report for goods sold report. Then you can see your list of all the products and a list of all return goods or return goods through credit note. You have a profit loss report. You can download this PDF or as an Excel. Then you have debtors report. Yeah, so this is the customer with unpaid invoices from 30, 60, 90, over 90 days. You can see them under debtors report. You have creditors report. These are the suppliers you owe. You can see them here. You can download them as PDF or an Excel. And then we have sales report. Yeah, so you have a sales summary, total sales, received amount, and the number of sales. You can have them as an Excel or a PDF. Sorry. Then the last part is user management. User, or let's say your sales people or employees, you can just manage them here. You can add with your first name, last name, phone number, password. So they will use this password when logging in. Yeah, so you can deactivate a user. You can just come here, edit, and deactivate a user. So when you deactivate a user, they will not be able to log in since you have deactivated to your business. The next part is branches. This one is still in progress. Yeah, another feature that's still in progress in development is eTeams, to enable you to comply with the authorities. Yeah, this one is coming soon, and the branch management is coming soon. Yeah, that's it on my part. In case you have any question, you can raise it on the comment section. Yeah, with that, you can follow us on Facebook. This is our Facebook page, My Accurate Books. These are our phone numbers and the email info@myaccuratebook.com. You can subscribe to our YouTube channel, where we will be receiving updates, and we have tutorials on how to go about on My Accurate Books. Yeah, and last but not least, we have our app on Play Store in case you have any troubles accessing our app through the web. You can download our app on Play Store. Just search My Accurate Books on the Play Store and install. Yeah, so thank you so much for your time. Yeah, that's it for today.
So thank you and have a nice day.